Hey, what's going on, guys? Thanks for joining Finance with John this week. Want to cover some more fubo content and have some fun graphs and charts and things we can kind of jump through here. So let's jump into it. Um, all right, so I kind of put together a couple some sort of like evaluation analysis here on fubo, just to kind of show really like a 5 year where they can go, what they can be valued at, based on a couple different assumptions and kind of metrics that we're tracking here. So for the first part of this, let's just focus on these two top graphs, revenue projections. These are all in millions, and then EBITDA projections, which is essentially their profit. See a couple different colors here. Anywhere you see the blue, that assumes a 10% revenue growth annually. The orange is a 15% annual growth, and 20%. The green is 20% annual growth. So, just to get a kind of general idea, and I think they were forecasting about a 5 to 10% revenue growth for 2024. So this is all based off of where they landed for year end 23. So as you can see, just kind of looking, going out. I'm not gonna zero in on all these values in the middle. You can pause it if you want and really look at it a little closer. Should be able to see the values. But essentially, getting to 2028, and I think 10% is pretty conservative. They should be able to hit that. It's just, last year they closed like 29%. Obviously, as they continue to scale, they're not going to be in that range. So if they do even better, then great. These values can be even higher. But I figured 10, 15, and 20 were kind of a good starting point to just kind of look at some of these. So going to 2028 on their revenue projections, if they have 10% annual growth, that puts them at $2.2 billion for year end 2028. 15% puts them at basically let's call it 2.8 billion. And if they can land 20% revenue growth each year, that'll put them at 3.4 billion. And this is just 5 years. If a lot of you are like me, you're holding this one for the long haul. In the 5 to 10 year span, they can grow a ton more from that point. But this is just to kind of see where things can go, and I'll get to it in a few minutes on the on basically the stock price and valuation and what that can do, based on what they're trading at for their. Let me change this. Their price to sales multiple. So that's just kind of looking at revenue growth, EBITDA growth. I essentially plugged in some assumptions for net margin. They closed 2023 basically with negative 12% margin. The year before that, they closed at negative 24%. So they showed a huge improvement. They cut that in half. So they're not going to have that same, going from negative 24 to negative 12. So I kind of just phased this. Obviously, making some real general assumptions. I tried to keep it fairly conservative, just based on where they're going and what growth they've seen so far and the growth they're projecting. And obviously, if they get a positive outcome on this, win this Disney lawsuit, everything can change here. And that can really, really accelerate this process. But essentially what I did, I plugged them in for 2024 overall at a negative 6% net margin, 2025 negative 2%. That's essentially, going with their positive free cash flow goal. I assume that doesn't mean all of 25. I'm guessing it'll be somewhere in the second half. They'll probably start to have those cash flow positive quarters, but net overall for the year, I'm showing a negative 2%. Then for 26, they go swing it to a positive 2%, 27 positive 5%, and 28 positive 8%. Making a lot of generalizations here, but to me, this seems pretty fair over a 5 year time span. But if they win this lawsuit and get more favorable terms, things like that, with some of the content they're licensing from Disney, I think they're going to blow these out of the water. So I feel like this is pretty conservative. Scream at me, yell in the comments if you think otherwise. But this is kind of what we're going with for now. So looking at our EBITDA projections, kind of starting in 2024, we're showing around that 90 to $100 million loss based on where they're at now. So that's at the negative 6% net margin. 2025, you can see they're in the negative 30s, so getting a lot better. This is when they swing to the positive 2% in 26. They range from the 30s to almost 50 million if they have more positive revenue growth. 2027 and 28, you can really just see a huge ramp up. 100, 120, 140, for 27, and then 28, if best case scenario, if they can have annual revenue growth of 20%, they can hit that 8% net margin. They can be in the positive by 273 million. So they are operating at a loss. They're growing pretty fast, but things can change pretty quick here. I've been following this company for probably 3 years now, since like the meme stock boom. And that was 3 years ago. It's like in 5 years, they can really show some massive improvement. And, their stock price is going to be reflected in that, especially if they get a positive outcome in this lawsuit. So going down to these two bottom charts, it's kind of chopping off the bottom, but you should be able to see it all right. So one thing I did, I just threw in this box over here. This is dynamic, so as I change this price to sales multiple, these will update. So this is basically if you invested $1,000 today at I think I plugged in $1.58 on the basically what their price is at right now, and then showing the growth between each year, and then the 10, 15, 20% revenue growth, and then based on the price to sales multiple of the market cap projections. So you can just, as we kind of go through here, I'm not going to poke at this every time, but it's just kind of an interesting metric to see basically what it could be worth as we continue to grow. So jumping in here. And I have some this shares section here. So right now, for shares outstanding, fubo is sitting at right about 300 million. So in this calculation, I just made some general assumptions that they'd increase by 5 to 6 million a year on their share count. This obviously assumes that they're done issuing more shares. This is really just an increase from like stock-based compensation, RSUs, things like that. So, obviously if they decide to dilute, which I don't think they'll have to, this, essentially just shows that 5 to 6 million share growth per year. So, they're at 300 now, so going up to 329 million shares outstanding in 2028. So those are the assumptions I used. And then so essentially, right now they're trading at like a 0.3 multiple. So what that means is their market cap's sitting right about like 450 million, and their revenue is sitting at like 1.4 billion. So that's essentially what drives where that multiple comes from, which is insanely low. This is basically priced for bankruptcy. A lot of people keep saying that. It's pretty true that it's trading at that. As long as they continue to execute, hit that profitability target, continue to grow, have more positive outcome on ad revenue growth, subscriber growth, things like that, you'll see this run up. There's just, I don't see them staying at this 0.3 multiple, but who knows? But basically what I'm trying to do is just project here where the price could go based on their current growth. So if they stay at this 0.3%, which is crazy to me. Um, if they stay at this, based on their revenue growth. So these are the same colors as before, the 10, 15, and 20. I'm going to skip a lot of these values, but you can pause and look at those if you want. But basically, at the end of 2028, if they're still sticking with this basically like 0.3 price to sales ratio, their market cap today being about 450 million, you'd see about 50% growth by going to this, 662 million, 827, or, just over a billion with 20% growth. So what that translates to in, sorry about that. Share price projections over here. So basically these are, same colors with these. So essentially if, they have that 20%, let's stick with this green example here. If they have the 20% annual growth, they're still at this 0.3 price to sales multiple. This stock price can go, which sounds crazy. From right now, we're at the $1.58. It can go to $3.11, which sounds terrible, over a 5-year span. I don't think they're going to stay that. Not financial advice. By that point, they should be profitable. It would not make sense at all. But even then, you could still double your money in 5 years. And then, 15% growth, it could be at $2.51, and 10% growth, it'd be at $2.01. So that just kind of shows how ridiculous their valuation is right now based on the current stock price, that it would only rise that little over that time. But just kind of wanted to show based on their current trading multiple. And then, going here, best case scenario, your $1,000 today would become about $2,000 in 5 years. So something more realistic. And even on the more conservative end, if they hit profitability, if they continue to grow, conservatively, I could see them hitting that 2x multiple, which is, like I said, on the low end. So looking better here on that, best case scenario with 20% growth over that time period, your 1,000 could be worth $13,000. And then looking at the market cap projections that, conservatively, they could be at a $4.4 billion market cap. A little bit better scenario, they could be at $5.5 billion market cap. And, with that 20% annual revenue growth, they could be at almost a $7 billion market cap. And that translates to basically best case scenario, if they're trading at the 2x multiple, we could be around the $21 mark. With 15% revenue growth, they could be trading around $17. And on the more conservative 10% annual revenue growth, they could be trading around the mid-13s. So not bad, considering this is still a pretty conservative scenario. I can do a couple more here. A little bit better scenario. So you see some of the massive tech companies that trade in like the 8 to 10x range. That'd be awesome if they could do that. I don't want to plan on that. We'll go to it after, just to show how crazy this can get. But if they're trading at a 5x price to sales multiple, this just kind of shows that $1,000 best case scenario could be worth $32,000 after the next 5 years. Market cap projections, you can see on the conservative 10% side, their market cap could be $11 billion. Medium case up to almost $14 billion, and in that 20% growth, best case $17 billion, which translates over here. Share price projections on the low end could be around $34, medium case $42, and best case, with the 20% growth, almost $52. So that's pretty good, and I think 5x would be fair. But for the sake of just being silly here and dreaming, if they can do an 8x multiple, let's say they absolutely kill it, market's great, they continue to keep beating, ad revenue blows up. They have good features. They're able to price things a little more fairly, given positive outcome of the lawsuit. They're able to attract a ton of subscribers, continue growing, over that 5 years. And they're, able to trade the stock in this 8x range. This is how silly we can get here. Best case scenario, your $1,000 could be worth $52,000 after that 5 years in the 20% revenue growth category. So looking at market cap projections, conservatively, they could be valued at about $17.5 billion. Medium case, about $22 billion, and best case with the 20% revenue growth, over $27 billion. Huge growth considering they're around, $500 million right now. So that's, what is that, like 50x or something, basically. Huge growth. And what that translates to is the stock price. Conservatively, it could be worth about $54. Medium case could right at $67, and best case with the 20% revenue growth, $83 just about. This is why I love the stock. Not financial advice, obviously. Just kind of wanted to jump around some of these scenarios with you guys. Hope this makes sense. But feel free to pause it and kind of go around and see what you think. I know this is one of those stocks. I really like it for this reason, because I do believe in the company. I think it's a good product. I think they're positioned right with kind of the cord cutting theme overall. They're not trying to be the biggest streamer. They just want to be a premium platform, with a solid product that, translates to a more higher value consumer to advertisers. I think they've executed well on that before. Over the last couple of years, and I think they can continue to do that. So this is just kind of a nice way to see, based on their current projections, how they're doing, kind of where they can go over that period of time. I hope this was helpful. If you want me to do more stuff like this, I do a ton of stuff with Excel with my day job, so there's a lot of different ways we can kind of slice this. If you want to do more of this, look at more scenarios, have any other questions, feel free to like, comment, subscribe, do all that stuff. Thank you guys so much.